Schwab Advisor Services is proud to support the RIA Edge podcast and equally proud to support independent financial advisors like you. In a challenging year, how did 68% of firms surveyed in Schwab's RIA benchmarking study meet or exceed their new client goals? By following key success factors such as leveraging new technology, adapting strategies to win new business and stay connected with their clients, while also attracting and developing the right talent. The Schwab RIA benchmarking study is just one of many ways they provide you with the insights and resources needed to succeed and grow. Get the full picture at advisorservices.schwab.com. Welcome to the RIA Edge podcast. This is Mark Bruno, Managing Director of the Wealth Management Group at Informa, and we are very excited to have a special guest here today, Don Bechter, Managing Partner from RMB, based out of Denver. Don, thank you so much for joining us here today. We're really looking forward to learning a little bit more about RMB's growth and success.
Great, Mark. Well, thank you very much for having me on the program. It's good to catch up with you again after a couple of years since you were at Echelon.
Yeah, and I appreciate you taking some time out. We've had some really great conversations lately with some of the largest professional buyers out there. But I've known RMB, going back quite some time. You participate in a lot of research projects that I've led. Also, obviously, had the opportunity to connect when I was at Echelon Partners. And you're doing a lot of things that I think our audience would like to be doing and can really learn from. You've done a lot to really drive growth in a number of strategic ways. So I'm really excited to get into the nuts and bolts of some of that. Before we do, Don, though, would you mind, just for our listeners who might not be familiar with RMB, would you mind just giving a little bit of a background on the firm and your role?
Sure. So RMB, we are an independent RIA, founded in 2005, founded by a couple of gentlemen that came out of a large bank broker dealer to form an independent firm. We are focused, I guess, when we think about where do we sit, we've got this combination of this very relationship focused financial and life planning advisory service, and we combine that with a high quality in-house investment expertise. And we think that is a bit differentiating. As you know, a lot of firms have outsourced the investment part of their business. And so we find that our clients see a lot of value in us putting both of those together and then delivering that with some expert teams that are up to speed in all those areas. So we ask a lot of our advisor teams in terms of their knowledge and what they're able to deliver to clients. So that's just kind of the business, at a very high level. My history, I had a 20-year history or career in investment banking before joining RMB in 2011. I mentioned to you that the firm was founded in 2005, and the founders of the firm was a gentleman named Dick Burridge. He is the RMB, and then Fred Paulman. I happen to be, Dick Burridge is one of my longtime dearest friends from college. We met as freshmen in college and had been friends ever since. When I mentioned I had been 20 years in investment banking, we sold our firm to a large Canadian bank in 2007. I stayed on for another 4 years, but had determined that I wanted to do something different with the rest of my career. Even though investment banking had been a great experience, it was just time to do something different. And so Dick and I were having lunch. I was telling him about what I was thinking about. He was talking to me about his aspirations for growing RMB outside of the Chicago area where we're based. And so long story short, we came to this idea where I would join the firm to start a Western presence of RMB based here in Denver, and then also bring, with my background, an inorganic growth capability. People say, shouldn't, go to work with your friends. But Dick and I had such a long period of, trust and professional and personal respect for each other that became easy. I had known Fred Paulman, his partner, and thought very highly of him. And then on top of that, I had been a client of the firm. When we left college together, Dick joined Lehman Brothers to start his investment career. I went off to go to business school and start this investment banking career. But I became a client, one of his first clients, I believe, with my $1,000 or whatever it was of net worth, and kind of kept along with the firm since then. So I knew a lot about what was going on, and it became an easy approach because I knew the type of people and integrity they'd have, and what that would look like. And so it's been great. And so I started off building this business in the West for RMB, and beginning this inorganic growth strategy. Now I'm managing partner, so I'm more across the firm, responsible for the day-to-day business and operations, and then developing along with the founders, and we have an incredible executive senior leadership team, the long-term strategic direction of the firm.
Excellent. And it's funny when people say that the RIA industry is a cottage industry, right? We tend to lose sight of that sometimes, but then you hear got started in a dorm room potentially, right? And that's how RMB, had put its roots in the ground. That's funny and really good to know. And it's really impressive to see where you both are today. Before we get into a little bit more about the growth story, Don, roughly how many employees does RMB have, and roughly how many clients or households do you all work with?
We have about 150 employees, and right around, I want to say 2,600 clients.
Okay. I mean, it's a really massive firm that I think might fly under the radar a little bit when it comes to our industry. And I think I know you've done some very interesting things that are behind the scenes for a lot of our audience and a lot of our listeners. If you could, as you look back at some of the things that you've done in maybe the last 3 to 5 years at RMB to drive growth, whether it's M&A, whether it's some more organic and strategic, business development and marketing that you've done, what would you say are the primary contributors to RMB's growth?
Yeah, and I think we're not dissimilar in that our growth, like our industry, has come from 3 main areas. One is organic growth, which is, in our mind, the most important, to have that foundation of organic growth. And we've had a history of, that growth culture and mindset. And I can talk a little bit more about that, but also inorganic growth, which I know not every firm is doing, and some firms are doing it a lot more than others. I think we are somewhere in the middle, and I can dig into that a little bit more too. And then lastly, obviously, the market is one thing that's out of our control, and you hope that over time it's going to help us if our revenues are tied to asset values, that's going to help us over time, but it doesn't always do that, like we experienced in this last year.
So maybe we can start with the M&A piece. We do talk about that a lot on RIA Edge, but I'm not as familiar, and I don't know that our listeners are as familiar with your specific philosophy around M&A and how you've approached it. So you mentioned that you're in the middle, so to speak, right? There are probably 10 to 15 firms that are responsible for 90% of the deals that take place in this industry. The others, though, are at times far more interesting because they might be more accessible, right, for our audience and our listening. They might understand them a little bit more. So can you talk a little bit about some of the M&A that you've done recently, and what role M&A you think will play in RMB's growth moving forward?
Yes. So I think you're right. We are in the middle. I would not call us, a roll-up firm. We don't sort of go into a year saying we're going to make 5 acquisitions this year. We are very opportunistic about it. And by that, I mean, we're typically not involved in bidding in auctions for firms. Pretty much, I think all of the deals that we've done, and there's been maybe 8 to 10 of them, have been sourced through our network. Either it's been introduced to us by a custodian relationship, or someone else in the industry, or we've known them through different industry events, and kind of build a relationship. It's almost like how we bring new clients into our firm. It starts with the relationship and it grows from there. And then we decide that we're both better off being together, and then we craft a deal that's fair, and that's how we get that done. So that's kind of been our history. We started very small in terms of our acquisitions, partly because it was new to the firm. We were just getting used to it, getting our feet wet. And some of the early acquisitions were very small in terms of asset size and revenue, but they brought in key talent. And, for example, in building our team here in Denver, we started with a very small acquisition that brought in, two incredible advisors that are still with us today in senior leadership roles. And so that was, just a great example of, how we started. And then as we got more confidence with it, learned lessons along the way as you do, and some of them, leave little scars, but you learn. And we started to do larger acquisitions. We had a very close relationship with a community bank in the Chicago area that helped us fund those acquisitions. And so we kind of built along the way. And they were different forms, whether it was, an actual RIA, some things on the investment side to fill strategic holes, bringing teams on, those sorts of things are what those look like. And then we got to the point I think it was in 2017, 2018 timeframe, we did our largest 3 acquisitions. And if anything, it put a little bit of a strain on our system, just doing 3 large acquisitions in 1 year. We are, a firm that we don't have a segregated due diligence, M&A integration team. So the people that are doing those roles are, they have day jobs. And so anyway, we there was some element of people waving the white flag after those 3 large acquisitions. So we kind of learned from that. We and also, had just the financial impact of purchasing those firms. So we decided to take a break and integrate the things that we had done. So we did those over the next few years. And then a couple of things happened. Obviously COVID hit, but I think even more importantly, what you saw happen over the last 3 to 5 years is the massive sort of inflow of private equity and other investors into our industry, driving more acquisition activity, driving values up. And as I mentioned earlier, that's competing in those types of things are probably not the best fit for us. So we've been a little bit quiet. We've looked at stuff, but haven't really done anything. I think we're ready to get back into that if we can find the right opportunities. And I think the way that the market has been going, we might find that comes back to a level where we can find some really good opportunities.
Yeah, I appreciate the history, but also the candor, right? M&A is really hard, and it's even harder to get right. So when you talked about doing 3 deals in a year and needing to take some time off, I get it.
Yeah.
It's not just getting the actual deal done, right? The real work happens on that Monday morning after the deal closes, when you try to bring everybody together. So I think, for some of our listeners who might be thinking about, right, some of their options, if they wanted to do, say, their first deal, there's some really good pieces of advice in there. Especially, one thing that, really resonated with me is you're not structured like a large publicly traded company that would have a corporate development team, right? That would do all the due diligence and knows all the questions to ask through that process, and thinks about, you don't have an integration team, right? You are the integration team. So there's so much that goes into the deal, above and beyond just finding the right price and the right fit. Making it work is a full-time job. So thank you for being really honest about your experience there. Just one final question on the M&A side. You touched on the state of the market right now, and activity slowed down a bit. It seems like valuations are still high, but not as high as they were at the peak. Just in general, curious, we talk about valuations quite a bit, but we don't necessarily talk about the quality of the firms that might be looking to sell right now. How would you categorize, some of the opportunities that you've come across over the last, let's call it 6 months or so?
Perfect. And I wanted, Mark, just to address one thing, just to follow up on something that you said before I get into that. And that is that I mentioned, being a little bit opportunistic, having, this relationship approach. That really helped us a lot too. I think for listeners, that as opposed, we're a firm that we're not going to acquire another firm and then just say, okay, keep doing what you're doing and, let us know how it goes. We really want to integrate them into the RMB culture, have it consistent from a branding standpoint across the firm. And so that means that integration has to go really well. And that relationship to start with is huge in making that happen and having the trust and all that. I just wanted to touch on that. That's a little bit different than, again, if you're out trying to acquire 5 to 10 things a year, it's very hard to do that, I think.
Sure. It's that satellite approach can work in some cases, right? But you're building one company, and that requires things to work a little bit more in some cases.
Yes. And then to your comment, I think the state of the market, this obviously has been and is a very fragmented industry, but it's consolidating. We talked about there's new capital that's come in that has been driving a lot of that. And then, we also have just forces going on where our clients are demanding more from us. They want technology. We've got regulators who are, creating, compliance obligations. That all that stuff is hard and expensive, and you have to have some sort of scale to be able to do that. And then also with what's been going on with new investors coming in, there's been this talent war where firms are out looking to bring in talent, high quality advisors, management, whatever it is. And so to compete with that, it's becoming harder and harder for smaller firms. And even our firm, I still consider somewhat small, but it used to be that $1 billion was big. Now, at 10 billion, we still sometimes feel small. So you have to keep up with that stuff. And I think that is continuing to drive a lot of this consolidation, where firms that might not have a great succession plan in place, or might not have the options to do that, need, as the founders get a little bit older, they need liquidity. So it's driving that to some extent. And I think the one thing that had changed, and this very well from your time at Echelon, is that it was that very few of the deals were, banked deals involving an investment bank. And investment banks, do a great job. They create a process, they bring in buyers that, you wouldn't otherwise find. But it does create this sort of, auction type process, which can make it tougher unless you're, a firm that's specifically built to deal with those situations. So anyway, that's just kind of a long-winded response that we are seeing, I think the market in terms of valuations and activity slow down a bit. And I think that's going to maybe bring it back to where sellers are bit more, rather than, hey, let's just go, do an auction and let's get 20 bids and figure out the best deal, be a little bit more thoughtful about what is the right home for me, my employees, our clients, and kind of think long-term about that relational fit, and more than maybe they have the last few years.
Yeah. And that's a great summary or state of the state of kind of where we are today. I hear that quite a bit. And I think being patient, right, is not a bad thing. And I think one of the things that's interesting is when I'm talking with sellers, there are still obviously people that are looking at it as a beginning of a succession plan or a succession plan outright. But there are more and more people who are looking for partners that are going to help them grow. They may be more of a sell and stay type of situation, which is driving more and more conversation right now, at least that I'm aware of. On the subject of growth, maybe that's a good way to transition to some of the success, some of the strategies you have in place that have helped RMB grow organically. What are some of the things you walk through? Obviously, there's the organic growth, inorganic growth, and the market or investment related growth. But when you're looking right at the marketing, business development, referral, just sort of like the bread and butter, right? That keeps clients coming in, helps you deepen relationships with existing clients. What are some of the organic growth approaches that you've taken that have been the most successful?
Organic growth is the most important, and we are very focused on it. It's important, as I'm speaking to the choir here, but very important for employees. Employees, advisors, they want to be with a growing firm, or else if you're not growing, they're going to leave. Clients, it's good for clients because you need to be able to grow and to be able to continue to invest, like I said, in things that they're going to demand of us. And then also it's a lot more fun to be part of a growing firm. I think, no one wants to be at a firm that's sort of going backwards and declining. So that's kind of the importance of it. It's been a challenge for the industry. You may know better. I think people tell us that when you peel away a lot of the, market stuff and inorganic stuff, that real organic growth in the industry has been sort of, from flat to maybe low single digits.
Absolutely.
Yeah. So that, and we don't want to be there. We want to be better than that. We've got a history of growth, culture, and have had success there, but honestly, over the last few years, we've had some challenges where, we might be back down in the mid single digits. And so the point that I'm making here is that it's something that you can't just, take for granted. It's something that you've got to continue to refine. You've got to keep it front of mind and, create discipline and intention around it, because, we talk a lot about if we think about three things that we want to focus on every day, it's doing a really great job for our clients and providing them exceptional service and advice. That's number one. Number two is growing the business, doing that for more clients. And then the third thing is everything else that you need to do operationally to support those two. But, when you think about it, you can spend easily 120% of your time focused on clients, because there's always more that you can do from them. And they've been requiring more from our industry over the last few years. So you can create ways to not focus on organic growth. And so that's where the discipline and intention comes in, and creating time for it. And so some of the things that we're doing right now, we're putting all of our probably 50 plus people in our firm that are either client facing or have some sort of service connection with clients through a business development training program that is, just again, always helpful to kind of remind ourselves of those, develop the right habits, make it part of your day and week. We are, part of the reason that people put that out that I mentioned is that you don't have enough time or capacity. So we're going through a pretty massive technology conversion with a goal of simplifying and automating and providing a lot more time in the day for our wealth management and advisor team so that they can spend more time with clients and prospects. We reworked our compensation system a little bit to specifically focus on that area. And then we've also tried to support all of this with a marketing effort. A year ago, we brought in a new chief marketing officer who's been fantastic. She's built a great team. We've done work on our value proposition. We've refreshed our branding and created these tools that are built to support that. So those are the things that we're doing right now, but it never kind of ends. You have to kind of keep doing that. And ultimately, for us, I truly believe that it's really not a sale, that if we're doing our job for clients, it just means getting in front of more potential clients that would be a good fit. And if we can do that, it becomes kind of a no-brainer when they get to know us, learn what we're about, what we do for other clients that are like them. It's very authentic. It's not a salesy approach. And so that's kind of the mindset that we try to have.
Yeah. And I appreciate, Don, that you didn't just highlight one thing, right, and position it as if there is a silver bullet. We know that there's not. And I especially appreciate the way you started talking about your organic growth strategy wasn't with a specific lever that you can pull to drive growth, marketing or business development, but how important it is to not get distracted by all the things that take you away from thinking about and acting on some of the growth opportunities that are out there, right? It's easy, right, to avoid sometimes because it's hard.
Yeah.
And the one thing I would like to just sort of touch on for another minute and maybe get a little bit more context. You mentioned this business development, training for some of your sales professionals. I find that really interesting. There are not a lot of firms that do that, but I find it particularly interesting at firms that may have had, 2 or 3 founders that were very good at business development, and every year they bring in 10, 20, 50 million in net new assets. Once you get to a certain point, a certain threshold, though, that 10, 20, or 50 million doesn't move the needle as much. So there does need to be some sort of scaled process in place that makes sure you're always growing consistently. That business development training program, is that something that you've developed, you do in-house, or do you partner with anybody? How have you approached that?
Good question. And I did want to mention that, yes, our founders, I would say there's nobody better in the industry than our founders in terms of, this culture and idea of growth. And so that's really propelled the firm in the early years. And as we get bigger, you just you can't take for granted that everyone's going to be, the same way in terms of how they think about it. And,
Yep.
We've got some absolutely great advisors, awesome with clients. But we kind of sometimes forget that, people do though need to be trained in this. They're not everyone is just kind of a born business development person. So that's part of it. We brought in a new chief client officer last year who is running kind of all of our client service business. And he brought with him this relationship with this sales training outfit and had used it before with success. And so that's kind of the history of that. And it's kind of an ongoing process through this year where we'll kind of, provide people with the tools and the mindset. And then, we've also, through some of the technology changes that I mentioned, are in a much better position to just sort of track metrics and activity. So that's the other part of it, is you've got to be able to, measure and track things as you go.
I find that really interesting, not just the process, right, that you're putting in place, but it's new and you're experimenting, right? And you're figuring out, will this work? And if it does, how do we improve on it? And if it doesn't, what do we try next, right? I think there's a ton of innovation and experimentation that's happening in this industry behind the scenes. So Don, just thank you for highlighting that one specific business development program that you have in place. Before we end, I do want to make sure that we touch on where you're seeing some specific growth opportunities for RMB, but potentially just for the RIA industry in general. I think our listeners may be sick of hearing me say this, but even though markets aren't cooperating or as great as everybody would like right now, and we're in bear market territory, I firmly believe this is a bull market for financial advice. I firmly believe that the need for professional financial advice has never been greater. And there are some amazing firms like RMB, right, that are in a position to help people who might be 3-5 years away from retirement or just starting retirement, and really need help figuring out how to properly withdraw, decumulate assets, and make sure that they are living off of a financial plan, right? A well thought out one. Don, with that, where are you seeing some opportunities now, more specific to net new, right, clients and net new client assets for RMB and other RIAs to grow their businesses?
Mark, you referenced kind of what's going on in the market, and I think all that stuff for us we look at as a positive, because while it can be painful, when asset values come down and all that, I think we're having a correction of some of the stuff that had been going on with artificially low interest rates and creating this dynamic that was not really sustainable. So we're kind of painfully going through that now. But anytime you go through something like that, like the financial crisis, for us, it creates more opportunities, because people are thinking about, whether they're with an advisor already, and they're thinking about, is this, am I being positioned right? Am I being serviced correctly to deal with this? They may think about, I should maybe look at other opportunities. Or, as you mentioned, the people that have not had an advisor, but they're coming up on retirement, they're inheriting money, they're whatever it is that they sort of determine, boy, I really do need some advice. That's really good for our industry, number one, but a firm like ours. And so, the demographics that better than I, in terms of, the massive amount of wealth transfer that is happening and is going to happen. And I go back to what I said before about, if we're doing our job right for our clients, it just becomes, in a way, a numbers game of how do we get ourselves in front of more client prospects that would be a good fit. And if we do that, we're very, very good at, bringing that business in. So it's really a matter of how do you create an environment where you can do that more often. So I think that's a huge opportunity for us. I think I mentioned earlier the key part of our business that is this high quality institutional class investment platform, which is unique for a firm our size, that our clients do find a lot of value in. I think the markets now, with the changes and interest rates going up, and dealing with equity markets and valuations, the active management is already and will, I think, become more of a important part of it, rather than just sort of easy market indexing.
Mm-hmm.
So that is, I think, an advantage that we have, and where we see a big growth opportunity, not only on the private client side, but within our institutional client base. And then, lastly, as I mentioned earlier, I think the opportunity is coming around again, where we can go back to some inorganic growth. Again, I think it's going to be measured and opportunistic, but I do feel like we're going to have that opportunity again here soon.
Yeah, I appreciate, Don, you not only sharing your thoughts, but getting very specific and giving some examples and some insights into the fabric of RMB. It's one of the things that has made you successful. It's one of the reasons you landed on the RIA Edge 100, which I should have said congratulations a lot earlier in the interview, but we're not surprised to see you on that list. So congrats again. And Don, thank you very much for stopping by the podcast. We really do appreciate it.
Well, Mark, thanks so much for having us, not only on the list, but on the program as well. And I very much appreciate it.
Yeah, we wanted to make sure that we help our audience get a better understanding of what's working right for you, because I know, and I knew going into this interview, that you were doing a lot of things that I think are accessible right for our audience. And we'll have to have you on for a part 2, because we barely scratched the surface on the talent and human capital side. And you did mention positions like I think you said a chief marketing officer and a chief client or experience type of role. That could be a podcast episode in and of itself. So keep your calendar open, right? We may come back to you for a part 2, Don.
Mark, I'd love to do that, because I didn't spend much time on just the great people we have. And that's what it's you've heard the thing about being a good coach correlates very well with the quality of the talent on your team, and it's the same thing with managing a firm. And so I feel just incredibly grateful and lucky to be, part of the team we have here at RMB.
And we're grateful for you taking the time out here today to join the podcast. And as a formal reminder to all of our listeners, mark your calendar. May 21st through May 24th is when the RIA Edge main event will be taking place at the Diplomat Hotel in Hollywood, Florida. So, Don, thank you very much for stopping by the podcast. Thank you to everybody for tuning in today, and we look forward to having you all back on the next episode of the RIA Edge podcast. Schwab Advisor Services is proud to support the RIA Edge podcast, and equally proud to support independent financial advisors like you. In a challenging year, how did 68% of firms surveyed in Schwab's RIA benchmarking study meet or exceed their new client goals? By following key success factors such as leveraging new technology, adapting strategies to win new business and stay connected with their clients, while also attracting and developing the right talent. The Schwab RIA benchmarking study is just one of many ways they provide you with the insights and resources needed to succeed and grow. Get the full picture at advisorservices.schwab.com.